That's their argument. Their argument is like, well, hang on a second. I'm up 10x. You're up 1x. Why am I giving up my 10x for a 2x? That's kind of argument. It's not quite like that, but I'm showing you the extreme of it. Like someone that had Solana could say they're up 10x, and someone that had a meme coin that's at zero, now they're dollarized, which they love.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin, author of The Cryptobians. I started covering crypto 8 years ago, and as the senior editor of Forbes, was the first mainstream media reporter to cover cryptocurrency full-time. This is the May 10th, 2024 episode of Unchained. Did you know Unchained is much more than a podcast? Last year, we unveiled a completely redesigned website, enriching your experience with the latest news, insightful analysis, compelling op-eds, and comprehensive learning articles and guides for beginners. Explore all this and more at unchainedcrypto.com. With iTrust Capital, you can buy and sell crypto in a tax-advantaged retirement account. Enjoy significant tax advantages, 24/7 access, and the industry's lowest fees. Polkadot is the original and leading Layer 0 blockchain with over 2,000 plus developers. And the Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem. Join the community at polkadot.network/ecosystem/community. Deploy custom crypto strategies and boost your yield with perpetual options on Vaultcraft, the universal DeFi adapter for supercharging your crypto. Learn more on vaultcraft.io. Today's guest is Thomas Braziel, managing partner at 117 Partners. Welcome, Tom.
Hi, Laura. Good to see you.
There was some somewhat positive news this week that the FTX estate had filed its bankruptcy plan. And I say somewhat because that comes with a big fat caveat, which I'm sure most people in the crypto world will know, and I'm sure we'll get into. But why don't you just give us the basics on what this news was and why it was being lauded?
Yeah, sure. So it's great news in terms of it being a milestone, and we can pick up parts of the plan. But basically, the first substantive draft of a bankruptcy plan and what's called a disclosure statement were filed 2 evenings ago. I've kind of lost track of time because I haven't slept much because of just all of the trying to read all the documents, summarize them for people that ask, and at the same time deal with claimants that now that the numbers are out there are interested in trying to sell. So a good way to think of a bankruptcy plan as is like a contract. And this is like, my parents are bankruptcy lawyers, so thanks for having me on. So we'll say it's kind of like everybody agrees to this contract and then the court stamps it in. And the contract has to have certain provisions. Those provisions are the bankruptcy code. Basically, it has to follow those provisions. And for purposes of confirmation of a bankruptcy plan, the biggest section that there's a lot of sections you have to meet, and it's under 1129 of the bankruptcy code. But what was basically filed is this first real draft where people got to see the numbers of what the debtor is putting forward and what the ad hoc committee and the UCC is still thinking of joining consensually, the Unsecured Creditors Committee, that is the official committee. But it looks like this is a nice first draft, and we can pick that apart. And then there's the big part as well. The contract is the plan, and then the part that kind of tells you how we got here and where we're going is a disclosure statement. That's a little bit like a book report for what the plan is going to try to do and accomplish. Because, the plan is written kind of in legalese, so sometimes it's hard to understand. And the disclosure statement tries to give the motivation as well as tries to air out or elucidate what the plan is trying to accomplish.
Okay. But the bottom line is that they're actually going to pay out more than 100% of the claims.
Correct.
And the reason why I said before that this was quote unquote somewhat positive news is because obviously this doesn't mean for the people who had crypto on the exchange, they will definitely receive far less in value than what they lost. So for instance, if you held one Bitcoin on FTX, you'll get back about $19,600 according to Matt Levine, who calculated that. And, most people are aware of that right now. Bitcoin is now trading at more than $61,000. So obviously it's less than a third of the current value. And, I did see some commentary kind of in the comment section of articles on mainstream media where people were confused and they thought, does this mean, that Sam Bankman-Fried didn't commit a crime? And just to make fully clear, the customers of FTX, they did not agree to become investors in a venture fund.
Right.
Their agreement with FTX was that FTX would keep their assets safe, not that they would invest them long term. So, none of this news means that Sam Bankman-Fried was not guilty of fraud or anything like that. So just to clarify things, that I've seen, some misconceptions I've seen. But it is uncommon for bankruptcies to return more than what the creditor's claims are for. So how did the estate manage to do that?
So before I go on to what to answer your question, I want to comment a little bit on what you said. The creditors definitely aren't being made whole in a crypto sense of the word. And that's important to remember. And that was really never going to be, it was always going to be very hard, if not impossible, to make creditors whole on a, crypto for crypto basis. And really that speaks to the fact of why we're even here on a dollar at petition date value basis. We're made whole with post petition interest plus some upside sharing, and the government government fines is basically the rise in crypto. There were a lot of great assets that John and his team were able to sort of either liquidate or sell off or pull back via project advance or other causes of actions that they were able to pull back assets into the estate. But the other big thing was, of course, just Solana ripping, going from I think $20 or even maybe $18 at the time of the petition to whatever it is now, $150. There were some great venture assets in there, but there were also like Bitcoin improving in value. I did see Matt Levine's article, by the way. He says 18,000. I think at the petition date, Bitcoin was around that number. So if you're getting 118, you're getting more than that, right? So it's more like 20 something. And that's not 62,000, which is what Bitcoin's at this afternoon. It just depends. If you were a lot of people as well, I think one of the things, if you actually look at the composition of assets that were in the estate at the time of the petition, a lot of people were selling really hard their crypto and trying to liquidate so they could get money off, or trying to get their money off. So actually the claim composition, about 2/3 of the actual depositors' assets are in stablecoin and fiat. And then, of course, you have another spectrum of like sort of meme coins and things like that. Some even lock tokens. So there's actually a small portion of people you're talking about here. I think they're the loudest voices, and they probably should be, because they're the ones that feel like they're kind of, is the word monetizing, or sort of like they're kind of lifting the boats of the other people, and they feel like, hey, well, hang on a second, like that doesn't feel equitable to me. And we can talk about that. Those are like inter-creditor issues. The claims are always going to be dollarized, because if you look at the bankruptcy code, the U.S. bankruptcy code is pretty clear that you have to dollarize under 502B of the bankruptcy code, like section 502. But I think the question was going to be, well, hang on a second. And I don't want to jump ahead because I know we're going to talk a little about this, but there are people that are still making title never changed hands arguments, and those are still going on. Someone brought what's called declaratory judgment, and that's been continued. The judge has authority basically to keep continuing that. This plan is out now, and the people that they're trying to bring this are frankly kind of a small faction of creditors. They have the right to be heard. They should be heard, and I respect, that they will bring their arguments. But I think they have a tall order ahead of them, because you have the bus moving in a very fast direction towards confirmation, which is John Ray and the debtor, plus the fact that 65% of the creditors were in stablecoin anyway going into the bankruptcy, plus you have distressed firms that bought up $4 billion in claims, or $4.5 billion in claims since petition. So you have a lot of constituencies now that don't really care about that argument. And so, not that it shouldn't be heard, but that it's a tall order for them to bring it. And they're more to it than just pointing to the terms of service and saying, oh, look, Sam said that title never changes hands. Sam said a lot of things that were not true and could be considered unconscionable or not necessarily enforceable. So,
okay. Well, so a couple of things. First, this whole issue about the dollarization of crypto claims in bankruptcy is, it's been a sticking point for a long time, starting with Mt. Gox, which happened more than 10 years ago. And actually on the Unchained website today, we did publish an op-ed from some lawyers from Allen and Overy who created a proposal for what could be done otherwise, actually. So we'll put that in the show notes for people to check out. But the other thing I wanted to ask about was when you talk about the inter-creditor issues. So you're saying basically like people who are saying like, oh, I had Sol on the platform. It's because of the fact that, I had that money on the platform that people are getting more. It's like socializing their gains. Is that what?
Right.
Oh, okay.
That's their argument. Their argument is like, well, hang on a second. I'm up 10x. You're up 1x. Why am I giving up my 10x for a 2x? That's kind of argument. It's not quite like that, but I'm showing you the extreme of it. Like someone that had Solana could say they're up 10x, and someone that had a meme coin that's at zero, now they're dollarized, which they love. And I can appreciate that, but I think it's hard. You do need a rule stick at some point. And I also think the bankruptcy code's pretty clear on 502Bs and applicability, meaning dollarization. I'm not saying that, and I haven't read this op-ed piece, that there aren't alternatives, and we could talk about those. And people can still present them. This is just a draft. That should be clear, that this is just a draft proposal from the debtor. It's just they don't make it lightly. A lot of time and effort went into this with a lot of constituencies to try to make it something that's approvable from a bankruptcy code perspective, but also to maybe get the required votes to get it through as well, which you don't necessarily need. You could still do a cramdown.
And what is a cramdown?
A cramdown is basically that you go to the court and say, we don't have the votes, Your Honor, but this follows and comports with the bankruptcy code and section 1129 for purpose of plan confirmation, and we think you should confirm it anyway. Over the kicking and screaming of the impaired accepting class that we haven't got the votes to approve it. So you can do cramdowns.
Wow.
I mean, yeah. I mean, I don't think people maybe don't realize that. They think, oh, well, we'll just block the plan. It's like, yeah, there are no girl gotchas in bankruptcy because it's a court of equity, meaning the judge has like the unilateral authority to do anything to bring equity to a situation. I say unilateral. There are boundaries, but they have a wide berth to interpret the code and do things that they think bring equity to a situation. Kind of like the declaratory judgment thing. Like the judge doesn't want to rule on it yet, so he keeps sort of punting the issue. When traditionally, when you follow declaratory judgments, it's supposed to be heard within a certain like specific time frame that's pretty short, and that's why people do them. But this is like the theory versus the practice of bankruptcy. I would note, just before we move on to something else, is, okay, you can say, okay, title never changes hands things, and guys where they feel like they were all in Solana and they should get that uplift, those are hard to help unless they actually win the title argument. But generally for the creditors, like 90+% of the value is going to them. So even if you did it differently, it's not like you're going to get a different result. There's only so much value in the estate. There's 14, 15, $16 billion of assets. That's all there is. It's not going to change because we're changing the way the plan works. Now, inter-creditor, it might change based upon what you think is right. And I was a little, not surprised, but I wasn't sure if they were going to try to get a bump for people that had crypto versus stablecoin. Like if you had Bitcoin and you had Solana or something in your account, and that was a big contributor to uplift, you weren't going to get a little bonus. But I guess this is kind of what the debtor and the ad hoc kind of put together. And I assume the UCC is pretty close to fully supporting this.
Okay. Yeah, I personally do think it probably would have made sense if they'd given the people with stable coins like 100% and then everybody else got the uplift. But one last thing before we move on more into some of the criticisms was just quickly, I wanted to ask that the speed with which they came up with this plan is, I think, like really remarkable. Apparently, for instance, Enron took about 3 years to get its bankruptcy plan in place. So what allowed this to be finished so quickly?
Ooh, I think just the how fast they were able to get to like 100% plus repay based on petition date values. Now, again, we can start arguing over who gets the uplift, but you still have to dollarize, and then you can start talking about how the excess spoils get cut up. I think a lot of it is, so that's really what led to the speed. And also John set a pretty aggressive timetable, love it or hate it. And, it's hard to say, it's like there's certain business judgment. People, I think, sometimes conflate business judgment with somebody being a bad guy, like, just being out, like just having like poor ethics or something. And those are two different things. I'm not saying like every single little thing someone does is a perfect judgment, but I will give them the benefit of the doubt for the most part and like let them, sort of run the file or run the case the way that they see fit within reason.
Okay. So. Yeah. I mean, because, it is surprising considering that obviously he said this was the messiest case, most disorganized he's ever seen. So in a moment, we're going to talk about the multiple criticisms of this plan. But first, a quick word from the sponsors who make this show possible. Polkadot is the original and largest Layer 0 blockchain with over 2,000 plus developers. The anticipated Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem, upgrading the infrastructure with 8 times higher transaction throughput and twice as fast block times, tailored core time for the needs of every protocol, trustless bridges to multiple chains, and revised tokenomics with a token burn to reduce inflation. Perfect for GameFi and DeFi to build, grow, and scale. Get your Web3 ideas to market fast. Think big, build bigger with Polkadot. Join the community at polkadot.network/ecosystem/community. Did you know you can buy and sell crypto with tax benefits in an individual retirement account? iTrust Capital makes this possible. But what does this mean? When you buy crypto outside an IRA, like on an exchange, you face taxes on gains. But in an IRA, like a Roth IRA, gains can be tax-free. iTrust Capital also has some of the lowest fees in the industry and 24/7 accessibility. Start now and maximize your retirement savings with iTrust Capital. Back to my conversation with Tom. So as we mentioned, we've already gotten into it. There are some different criticisms of the plan, and probably one of the most outspoken critics is Sunil Kavuri, who's a creditor who is also a representative of the largest creditor group. And he is actually recommending that people vote no on the plan. So what are his criticisms?
So yeah, I'll summarize his criticisms. We also maybe should have gone over just like the rough outline of the plan for
Oh,
people
yeah,
that just
yeah.
want to get the take.
Sorry,
But maybe
go ahead.
basically, majority of the creditors are going to be international below 50,000. They're going to get cashed out 50,000 US dollars. Anybody with that 50,000 or less in what's called a convenience class, and they're going to get cashed out and basically get 118 cents on the dollar based on your petition date values. Those are the biggest in number or amount of actual claims. That'll help with the administration of the case, bring down the administrative burn, also take care of a lot of small creditors. So, and anybody with 50,000 and above is not in the convenience class, and they will be looking at 127 to 145. And those numbers are projections based on the liquidation value of what they get for their remaining assets. I mean, they still have Anthropic to sell. They still have Magic Eden to sell. They still got a number of tertiary things to sell. And that'll be based on, just what they can get over the course of the next year or two. And they're pushing for plan confirmation. Basically this summer, they're talking about voting this summer and plan confirmation in September, with payments going out within 60 days of that confirmation. So if you push forward 2 months, that's November checks for basically anybody with 50,000 and below. And you might get interim distributions for 50,000 up a few months later. It doesn't specify in 60 days for the larger creditors. The other parts that are interesting are FTX US is getting basically the same treatment. FTX EU, there's some question marks around what these people are actually getting. They're definitely getting 100 cents, but the question is, are they getting 118? Are they getting 100? Are they getting 127 and 145? The plan was extremely unclear because that's being run out of Cyprus. Also, I think there are some Bahamian creditors that are part of basically the
FTX
digital markets have some tricky claim issues that we're seeing pop up. Lastly, any big broad pushes. Oh, and of course, no preferences. They're basically waiving all customer preferences as long as you vote in favor of the plan and you're not an insider and didn't have constructive knowledge of, the bankruptcy, things like that.
And explain preferences again.
Yeah, and preferences, everybody's favorite topic. Basically, any withdrawal made in your account within 90 days before the petition date is subject to what's called a Section 547 preference action by the bankruptcy estate. And, there were defenses to preferences, but given the recoveries in the case, the debtors basically come out in the plan and said, look, we're going to waive all preferences. As long as you vote for the plan, you'll get a release from the preference. I mean, it's good to see. It's also kind of like, okay, you're giving us something you were going to have to give us anyway. That's how the law basically works. We're giving you something we were going to have to give you anyway, because you can't go after preferences if you have 100% repay cases. I mean, not only is it moot, because when you pay in a preference, you get a claim for that amount that you paid in. If it's 100% repay, you basically are giving 100 and then getting 100 back later. So it's not something to pursue. Also, just under the operation of the code, you can't actually pursue them under 547. So, because you didn't get more than you would get in the liquidation. So those are the big broad brushstrokes of the plan.
Okay, so now let's talk about these criticisms of Sunil Kavuri and other people like him.
Sunil's big argument is around title not changing hands, and he's pointing to the terms of service. I think he has a decent argument because they specifically say, title remains with you the whole time. The issue is there's so much more from a legal standpoint that you need to develop, and the facts actually matter. So you can't just point to the contract and say, hey, this is what it says. So he's got a pretty tough road to hoe, however you say it, to get to the result he wants. I mean, I would also say a few things I don't know if this is just from public knowledge or how I know, but I'm pretty sure his claim is specifically FTT tokens. So I'm not even sure if what he's doing is helpful to his own position. Maybe he just feels like he still wants to try to push for it. but I'm not sure it's so great for FTT tokens. I mean, currently, that was the other two big parts that I missed. Both the pref equity, so all the VCs that invested in FTX over the years, and FTT token are getting zero in the proposed plan now. These things could shapeshift over time. Maybe some of the venture capitals come out. Maybe somebody with a big FTT position comes out and tries to push for different treatment. But right now, it's looking like it's pretty uphill. So I think the title argument is been kind of marginalized by this plan coming out, and I think that the guys should really, if they feel strongly, they should try to bring it. I'm not sure how helps Sunil himself personally, but I think for people that maybe had Bitcoin, Ethereum, and Solana, big portions of their account, it's something to consider and listen to what he has to say and see if you want to join him. I don't know exactly if he has like a formal group, because technically when you form groups, you're like supposed to file I think it's a 2019 or 2019, like who's a part of your actual group. But hey, I mean, it's interesting to see and kind of fascinating to watch like creditors actually organize in kind of new and interesting ways, honestly, over Twitter or something like that, and over like Telegram groups. So the bankruptcy, it's never seen that before.
And so just to clarify, like basically you are saying that he might get together people who held valuable crypto to say like the profits here should not be socialized.
Right.
But as you point out, I do think I read somewhere that he had $2 million worth of FTT tokens on the exchange. I will have to check to see if I can find that. Just a quick note, everyone. After we wrapped, Sunil confirmed for me that he had $2 million worth of Bitcoin, Ether, and British pounds on FTX, as well as a small amount of FTT. So, in this case where, they were saying like people with FTT aren't going to get anything, like it's sort of weird, like it contradicts, I don't know what his other assets were. Yeah.
But look, I think it's a valiant fight to go after. The other, I think, named party is Noah Capital or Noah Capital out of Switzerland. I know the guys there. I mean, I've just interacted with them over the case. Nice guys. I think they have, I'll just say, a claim that fits that description, where they feel like they're being socialized, their profits are being socialized. And I think it's worth a shot. Maybe it ends up making it where the settlement is a bump to people that had that, maybe call it 10% bump, maybe 20% bump. But it's not going to they're not just going to give it to you. And I think what we've seen through the course of this case, at least in my opinion, John's pretty hard driving, and he's not just going to give it to you. He's going to make you actually come and litigate it. And so he's not going to give it to you until he has to maybe get the votes if that's needed. But again, there's still cram down stuff like that. You always like to see things consensual, and judges do as well. So maybe there's a compromise. Maybe, you walk all the way to the 11th hour, and then literally right at plan confirmation, there's a little bump just to get the votes and to break, no offense to them, but probably break open and half the people leave his thing to vote yes for the plan. So this sort of jockeying will happen many times in bankruptcies, and you'll see iterations of plans to get the votes, basically to be able to get confirmation consensually.
Okay. Do you want to just call out certain decisions that the FTX group made, which personally, I do agree that they're a little bit confusing. So, one of the criticisms that Sunil made was that the estate has, quote, destroyed and estimated over $10 billion in value for FTX creditors. So I don't know about that number, but one example that the block reported was they said that FTX sold a stake in Miston Labs and token warrants for the SUI token, and they sold it for $96 million. And now the block reported, at least this week, that the tokens are now worth more than $900 million.
Wow.
So I wondered if you thought that Sunil's claims in that regard had merit.
Again, this is like a business judgment rule versus like an ethical issue. I don't know, it's easy to say like, if they would have come out of the gate and I don't know, sold Solana for $30, everyone would be like, you did it again. You lost $4 billion. So I think it's a little hard to like, whatever you call that, Monday morning quarterback it. I think, the estate, of course, this is like a historic, bankruptcy and a historic crypto bankruptcy. And so I'm sure stuff like that doesn't happen. That was a stark one. I know that a lot of people pointed out, and I don't know the actual timing, but again, I think it's a business judgment issue, and the estate was it was very early in the case, and the state was trying to get money in. Recently I had heard through the grapevine that they had a pretty sizable piece of Magic Eden, which now, because Solana's back and because of meme coins kind of coming and being not that they weren't a thing, but becoming sort of in vogue, you've got, and then I guess they sort of take the pole position with Solana and like NFTs that are on that. And versus OpenSea, and they're talking about a very aggressive valuation for it. Now, if the estate would have sold that in the very beginning of the bankruptcy for 10 million, which is I think the original investment, that would look very dumb because now apparently this is worth, a few $100 million. So I'm just sort of playing devil's advocate a little bit on this. Again, I think it's a business judgment versus like an ethical issue.
Okay. Yeah. And then last quick thing, and this also falls under the, I guess, category of business judgment, but I did see also people are criticizing them for not doing the FTX 2.0 reboot, which, potentially crypto exchanges, they do make good money. So
I was surprised that they went down so deep on it. And I heard, probably like yourself, rumors about certain bids that were put in and how the estate wasn't taking us seriously. And I heard some of these rumors from certain firms that shall remain nameless. I can't speak to it. I don't think from a bankruptcy perspective, if you think of a state professional try to get into his head, John or any of the state professionals, like they really just want to look good. They want to have the highest recovery, make the most amount of fees for themselves, and look the best. I mean, if someone's going to write a $500 million check and let them restart the exchange and you look like a genius, that's great. I think the problem that the FTX 2.0 really ran into was feasibility issues. And I don't think any of the, I know Bitfinex was a positive example because there was a debt recovery token. But outside of that, I can't think of any crypto sort of exchanges or any sort of these CeFi platforms, let's call them in crypto, that were able to successfully reorganize in the traditional sense where there's a reboot.
Okay. Yeah. Let's also talk about the Sullivan and Cromwell issue because I guess they've earned more than $320 million on this case, and they are named as defendants in the class action lawsuit that I think Sunil and other people have brought. So, obviously amongst a certain set, they're controversial figures. Obviously, Sam Bankman-Fried has had a beef with them and says, they have this conflict of interest. So I did see people taking exception to the fact that in this plan, there's a so-called exculpation clause that means that
Right.
they and others involved cannot be sued. What are your
Right.
thoughts on that?
Oh man, this is like hot topic in bankruptcy, even outside of crypto. These releases and exculpation clauses, and even third-party releases. Anyway, so there's clearly some conflicts of interest. If I recall from the docket, there is conflicts counsel that was hired to look into pre-petition activity by Sullivan Cromwell. I think it was Quinn Emanuel, which are no slouches when it comes to looking at just pre-petition behavior. So that's good to see. I can't speak that much to it. It'd be nice to have a different counselor that wasn't conflicted, but we're kind of here, and I like to think that you're talking about some of the biggest law firms in the world. So it's not like they chose like some rinky dink law firm that was already helping Sam pre-petition it. I mean, and sometimes people will make these connections and it's like, well, okay, yeah, but Goldman's like probably one of the better counterparties. Yeah. Okay. Maybe there's a connection, but also it's a big firm. And you can say the same thing about a lot of these big firms. Like, sometimes the joke and people, the lawyer joke of, if there's no conflict, there's no interest. But I really think it doesn't look great. I think it should be investigated. I think Quinn, as independent counsel, is investigating it. And in this third part, this sort of lawsuit outside of the bankruptcy is interesting. We'll see. They'll probably be able to shake the trees and get something. And, maybe they did, those claimants deserve it. It doesn't look great, but I think we're kind of here. And it's so far removed from the bankruptcy, I don't really keep up with it too much. But, anybody that thinks they have a cause of action like that should consider bringing it. I know it's another part to your question, but that's how I would say. I mean,
yeah, no, I basically was just asking, what your thoughts were on that. I did want to also just ask about this fact that the U.S. government is going to withhold 24% in backup withholding at the time of the payouts. So what does that mean for the non-U.S. taxpayers who are creditors?
So it's rather unfortunate, but we've had these issues when we've participated in either foreign bankruptcies or U.S. bankruptcies where my client was, an an offshore entity of some kind. Is they do many times not, they want to be pretty conservative. They don't want to, get in trouble for not withholding tax. And if you read, the IRS code, this comes up a decent amount, is my point in bankruptcy. And it is quite possible that people will have withholding tax issues. Someone was saying, well, there's no withholding tax in BlockFi, and they seem, to be just fine. I'm like, so I looked at the plan. Actually, I was just looking at it literally last night, and that's not actually the case. There is some withholding tax issues, So people need to consider it. There is a dual track where you can go down and file a claim in the Bahamas. And my understanding, and this is, as someone who's read a lot on these subjects because it's been coming up in the bankruptcy, but not as a tax expert, that there is no withholding tax in the Bahamas. So if something that really concerns you and you've talked to your lawyer and you've spoken to a tax advisor, maybe that's a good route for you. Otherwise, of course, there's an active market for claims. And I think some of the trade claim guys are using this to get people to come out and sell their claims. I think it needs to be thought through, but there is potential to have withholding. And it's something you need to think about and see if there's a way to potentially not like, I guess I'll tell you in BlockFi, you have to fill out a form that says this is effectively connected income to the States. But my understanding is once you do that, I think you have to file a return. So I think it's just something you really need to talk to a tax expert about. But for the smaller creditors who maybe don't have the capital, maybe some people can band together and get some tax advice on this. But the thing about the bankruptcy estate is they're not going to give you too much clarity on it. It's because they themselves don't want to be giving out tax advice. So it's tough on the individual creditor. I think there'll be more this is the kind of thing where as the plan and the disclosure statement sort of get massaged and you see version 2 and 3, you will see more clarity and more specific clarification around these topics, like how the distribution process will work, what the holding tax will be, and that'll be really good for creditors. So I know you were talking about problems that people are seeing in the plan. Those are big problems. I see logistical issues that need to be not addressed, but just massaged and talked to with the big constituencies about what are affecting creditors. Withholding tax and logistics of distributions are two big topics that I think will need to be addressed.
Okay, we'll go into that more about logistics of distributions because, I did see one of the issues people have with this is the fact that like paper checks are being used. So yeah, talk a little bit more about that.
So the current version of the plan, again, it's a draft. It's very vague, and it basically says, we're going to be paying out U.S. dollars. And I don't think it doesn't say checks, but I think by the way it's worded, people are surmising that like, hey, that's just basically could be a check in the mail because they don't specify
Oh,
wires. So I think it's possible they're going to get more clarity on this. And what'll probably end up happening is for smaller creditors will be checks. For larger creditors, they'll have the option to do check or wire. I also think if you read the plan, one other logistical issue is they say US dollars. I think, someone in Germany or in London or in Singapore, in Hong Kong or wherever, they're going to have issues with this. So I think they're going to probably have to move to multi-currency potentially. I don't think they're going to do stable coins. I know a lot of people are upset. They're like, hey, we're crypto bros. We want to be in crypto, or we're crypto people. We want to be in crypto. And I think that's going to be a tall order because it's going to add a lot of administrative expense and complexity. I know people think, oh, no, actually, it's even easier. I just don't see that in the cards. It's possible. And if something you really feel strongly about, should push forward, whether, I wouldn't recommend writing a letter, but trying to talk to other creditor bodies and see if you can get their support, maybe through the UCC or the ad hoc. But I do see those two big things, like probably having more payment agents and also having multi-currency will be something that will maybe be added as the versions of the plans for the versions come out.
okay. Yeah, it's one of those things where it is definitely easier for all the claimants or creditors, but then it pushes the burden of that on the bankruptcy estate, and they may not be fully set up, to do that. But anyway, I guess the last thing to ask just is, how likely is it, do you think, that creditors will vote no? And like, what are kind of the next steps, for all this?
So the next steps are the plans out there. The UCC hasn't fully committed to supporting it. The Unsecured Creditors Committee, just to be clear, the ad hoc, I'm pretty sure, I'm almost positive has. So that's a big creditor body. Remember, the ad hoc is, I think, $4+ billion of creditor claims. A lot of the big distress firms are part of the ad hoc. It was their way of having a voice without being on the official creditors committee because they didn't own claims at the petition date. I mean, you technically can be on there, but the Unsecured Creditors Committee was formed in the first couple of weeks of the bankruptcy. So a lot of these guys didn't have large positions. So the next steps are really, you'll probably see the plan talked about in the next couple of court hearings. People will start bringing up issues. The judge will start, asking the debtor, hey, what are you doing about this? And what do you think of this person's issue? And is there a way to consensually resolve this? Judges love to not decide things and basically push everybody into the settlement. What they do is, do you really want me to rule in this to one side? And they say, do you really want me to rule in this? think you guys can figure out a solution. You guys aren't that far apart. And so you'll see that over the next couple of months. Then in the summer, basically once the disclosure statement and sort of plan are approved for voting or solicitation purposes, that'll be coming out. People will get ballots. And then this summer, you'll be voting, basically probably checking a box, logging in, checking a box, and like maybe putting in some code just to, to verify who you are, that kind of thing. So the ballots, the voting, and then plan confirmation in September, and hopefully distributions later in the year. So that's the rough outline. And within that, you will see all those all those little issues we were talking about, whether some people will maybe start filing objections to the plan because they don't like some portion of it. You will see stuff like that on the docket. And they'll be pretty limited in scope. And then you'll have people that'll file wild motions that will just not have any bearing on anything. And then you'll have like the senile title never changes hands, terms of service argument, which we'll see where that comes to a head. And if that honestly could end up being pushed even post confirmation, which is kind of crazy. But then there would have to be some holdback. So that would hold back more capital for people with over 50K claims from getting their money, because you'd have to hold back and reserve the capital in case the state lost that argument. And then a lot of it had to flow to those parties, if that makes any sense. So you can always have plan confirmations and still after confirmation have a decent amount of arguments and litigation going on, and you're just reserving capital back.
Okay. All right. Well, clearly this is going to drag out much further. But thank you so much, Thomas, for explaining all this on Unchained.
Oh, Laura, thanks for having me on.
Don't forget, next up is a weekly news recap, today presented by Wondercraft AI. Stick around for This Week in Crypto after this short break. Hey all, I'm excited to share some news with you. Unchained has launched a new crypto and macro podcast. I highly recommend you watch the first episode of Bits and Bips, exploring how crypto and macro collide, one basis point at a time. Hosted by experts James Seifert, Alex Kruger, and Joe McCann, they dive into why we might be in a super cycle, an intriguing theory on what the SEC might say about ETH, Tether's business, and much more. Don't miss it. Deploy custom crypto strategies and boost your yield with perpetual options on Vaultcraft, the universal DeFi adapter for supercharging your crypto. With version v1.5, users can now earn options on Optimism and Arbitrum while also rebalancing multi-strategy yield products all in one vault. Mint Vaultron, Vaultcraft's NFT reward optimizer to earn even more in XP points. From institutional service providers to DeFi degens, anyone can deposit any asset into Vaultcraft's products to instantly start earning yield on their crypto. Learn more on vaultcraft.io.
Welcome to this week's Crypto Roundup. In today's recap, we explore Binance's handling of allegations against a high-value client, the progress of Ethereum's EIP 7702 for its Pectra upgrade, SEC's enforcement against Robinhood Crypto, Grayscale's withdrawal of its Ethereum futures ETF application, the rise of Fantasy Top and Pump.Fun in DeFi rankings, the Athena and Bybit partnership to boost USDE, and the challenges facing airdrops, highlighted by Mode's price drop. Thanks for tuning in to the weekly news recap. Let's begin. Binance faces criticism for handling of allegations against a high-value client. According to a report from the Wall Street Journal, Binance's commitment to thwarting suspicious trading was tested when an internal investigation revealed that a high-profile client known for a lavish lifestyle, including owning a Lamborghini, was manipulating markets. Despite these findings, Binance chose to retain the client and dismiss the investigator who uncovered the malpractice. This decision sparked concerns among former company insiders, suggesting that Binance prioritized profit generation from large clients over implementing robust market surveillance. Such actions seem contradictory to the platform's stated goal of ensuring a safe and trusted trading environment. The situation reflects a broader issue within the crypto industry, where large exchanges face scrutiny for potentially overlooking manipulative practices to preserve lucrative trading fees. Binance, however, has denied these allegations, asserting a strong commitment to market integrity and user safety, regardless of the financial stature of its users. A company spokesperson emphasized their rigorous surveillance framework designed to combat market abuse and uphold the platform's safety. Vitalik Buterin's EIP 7702 gains momentum for Ethereum's Pectra upgrade. Ethereum Improvement Proposal 7702, introduced by co-founder Vitalik Buterin and his team, is rapidly gaining traction among developers, suggesting its potential inclusion in Ethereum's next hard fork, named Pectra. It seeks to enhance Ethereum by allowing externally owned accounts to temporarily transform into smart contract wallets for a single transaction, reverting to their original state thereafter. The proposal emerges from extensive discussions within the Ethereum community, particularly around earlier improvement proposals like EIP 3074 and EIP 4337. EIP 7702 is designed to refine the path toward what's termed account abstraction, aiming to convert all EOAs into smart account wallets, thereby boosting both security and user experience. Lucas Shore, co-founder of wallet infrastructure maker Safe, highlighted EIP 7702's advantages over EIP 3074, noting its leaner approach and compatibility with ERC 4337, which prevents the emergence of fragmented ecosystems within Ethereum. Additionally, EIP 7702 addresses concerns about quantum computing threats by enabling the use of stronger cryptographic schemes and quantum-resistant technologies. Robinhood crypto faces SEC enforcement action. Robinhood, a prominent retail trading platform, has received a Wells notice from the U.S. Securities and Exchange Commission regarding the crypto tokens traded on its platform. Issued on May 4th, the notice is a preliminary step by the SEC to bring enforcement action, indicating possible violations of securities law. Robinhood's chief legal officer, Dan Gallagher, expressed confidence in the legitimacy of their listings. He stated, "We firmly believe that the assets listed on our platform are not securities." The company is prepared to defend its stance, with CEO Vlad Tenev indicating readiness to contest the matter in court if necessary. This move comes amidst a broader SEC crackdown on the digital currency industry, with the regulator asserting that most cryptocurrency tokens are securities. Robinhood, which has previously attempted to register as a special-purpose broker-dealer for digital assets, faced a setback in its efforts and has since delisted certain tokens like Solana, Cardano, and Polygon. Following the SEC's action, Robinhood shares experienced initial volatility, but ultimately rose by 2%. Grayscale withdraws Ethereum futures ETF application amid regulatory uncertainty. Grayscale has unexpectedly withdrawn its application for an Ethereum futures trust ETF with the SEC, a move that has puzzled many. Initially filed on September 19, 2023, the application was retracted on May 3rd after the SEC delayed its decision 3 times, with a final verdict due on May 30th. James Seyfarth, a Bloomberg ETF analyst, commented on the withdrawal, suggesting that the original filing may have been a strategic move by Grayscale. This was essentially a Trojan horse filing to create the same circumstances that allowed Grayscale to win the GBTC lawsuit, Seyfarth said. However, he also noted that this early withdrawal might have been a way to avoid aggravating the SEC, as it would reduce the regulator's workload. The broader sentiment around the approval of a spot Ether ETF remains pessimistic, with only 7% of market participants on Polymarket believing an approval will occur by the end of May. Fantasy Top and Pump.Fun surge in DeFi rankings by fees generated. 2 relatively new platforms, Fantasy Top and Pump.Fun, ascended to the 6th and 7th positions among crypto protocols based on fees generated on Wednesday. These platforms, only a few months old, have quickly amassed significant trading volumes and user engagement. Fantasy Top, a decentralized exchange specializing in trading cards featuring prominent crypto personalities, now sits just behind Tron and ahead of the BNB Smart Chain DEX PancakeSwap in the rankings. Meanwhile, Pump.Fun, known for its meme coin launch and trading services, currently occupies the 8th spot. The game Fantasy Top has turned crypto influencers into Ethereum NFT trading cards. Players earn crypto and in-game prizes by assembling lineups of these cards, with their value driven by real-world Twitter engagement. This inventive approach has captivated crypto Twitter, leading to a surge in the platform's popularity and fee generation. Athena and Bybit partnership aims to boost USDE growth. Athena has partnered with the cryptocurrency exchange Bybit to enhance the use of its synthetic dollar, USDE. This collaboration will allow USDE to be used as collateral for trading perpetual futures on Bybit, offering a yield on this collateral, a feature uncommon among other stablecoins, such as USDT. Bybit's integration includes trading BTC, ETH, and SOL through its unified trading account, as well as adding BTC, USDE, and ETH, USDE spot pairs. Additionally, USDE will be part of Bibit's Earn platform, facilitating launch pool farming for new tokens. Despite a promising start with rapid market cap growth to $2.39 billion, USDE's growth has recently stagnated. Guy Young, founder and CEO of Athena Labs, highlighted the potential impact of this partnership on the stablecoin market, suggesting it could challenge the dominance of traditional stablecoins by providing benefits for crypto-native users and optimizing trading efficiency. Mode's price plunge highlights challenges among airdrops. The market's latest airdrop saw Mode's native token drop over 60% immediately after release, signaling potential issues with the overall airdrop strategy. Other platforms such as Camino, Renzo, Parkle, Wormhole, and Friend.tech have experienced similar declines post-airdrop, underscoring a growing skepticism about the effectiveness of this approach. Recently, community reactions have played a significant role in shaping airdrop outcomes. For instance, the Eigen Foundation faced intense backlash for its initial distribution plan, prompting a revised allocation to appease angry users. Uniswap founder Hayden Adams has weighed in on the topic, advising projects against being stingy with token distributions and urging them to create real liquidity from day one. And that's it. Thanks for joining us today.
Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Juan Aranovich, Megan Gavis, Pam Majumdar, and Mark Kuria. Thanks for listening. Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 5 days a week, with host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.